Hey Puppy Trades! I wanted to do a video analysis update on my top 10 buy and hold stocks for October 2021 and beyond. So I meant to post this video yesterday. I had some uploading issues, but I think I figured it out. We're going to do a top 10 for these long-term picks. One, because we're having a great opportunity in the market right now. And two, because I really want to get into the criteria that I use when I personally am looking for a buy and hold stock for the long term. So here is that criteria. The first thing I ask is this a value stock or is this a growth stock? Okay, the general idea is that a value stock has a much lower beta, so it has a lower risk reward ratio, and thus a higher amount of money is needed to achieve the same return than would be with a growth stock. There's also this idea that a value stock, you're investing against what's called a margin of safety. So the margin of safety is just this fundamental idea. It's the reason value stocks are called value stocks, because they have intrinsic value. If you were to strip Boeing and McDonald's and Coca-Cola down to their assets, you would find that Coca-Cola has all these distribution centers. It has all these bottling facilities, right? Boeing has all these airplanes and all these facilities, and McDonald's is one of the largest owners of real estate in the world, right? So can those three names technically go to zero? Yes, they technically can, but there really is this idea that a value investor isn't necessarily trading against zero, whereas with a growth stock, if you invest in a new electric vehicle company that just recently IPO'd, you really are in a company that could go under, it could go to zero. So number two, how much blood, how much basing am I taking advantage of? This is a huge one for me. Some say you never buy green because the biggest gains from longs are from taking advantage of nasty dips and brutal consolidation periods. So I said, consider how many retail traders have been worn out of the multi-year consolidation of silver or have capitulated, some due to margin, during Alibaba's steep dip. More importantly, consider how long institutions have been accumulating the supply and absorbing the liquidated shares. So I said, consider Salesforce for the past year. It was in this boring kind of consolidation bull flag, and then just recently it goes on this rally and it breaks above a high that it had been under for about 13, 14 months. So what we learned was that Salesforce was being accumulated by large institutions for the past year, and now they have it and they're ready to let it go, right? So the bigger the base, the bigger the breakout. I like to take advantage of the blood and kind of get in while we're still dipping. Okay, so what is the upside, right? This is a big deal. This is the reward part of the equation. It has a direct relationship to the upside, right? It also has a direct relationship with the recency of the IPO. Consider electric vehicle names like Acromoto, Workhorse, and Nikola versus established automakers like GM and BMW, right? The newer EV names are still building their factories. So an investor in those companies, they're taking a bigger risk because they are betting on the potential for exponential growth, right? So there's a much higher reward opportunity. If you're investing in a company that has recently IPO'd versus one that's been around for centuries, then you are going to get more rewarded if you're correct, and you're also going to get more burned if you're incorrect. Number four, what is the level of confidence for the projection? This is more subjective, but do I have the stock's number, right? There's the idea you always add to your winners, right? I think I've proven that I've got Pfizer and Microsoft and First Solar and Nvidia and Bitcoin. I've got a pretty good idea where these stocks are going, versus with Alibaba and Lordstown Motors and Zoom and Huya, right? Zoom and Alibaba, I'm still bullish on, but I've been bullish on these names for a while, right? And Lordstown Motors and Huya, I was very bullish on them. I still am bullish on them, but at least in the short term, I was misled as to the direction that those two would be taking in the longer term picture, right? So the idea is you try to add to your winners. If a stock's not going well for you, don't force the issue, right? And then number five, how well do these stocks fit together as a group? Okay, how much cross-sector exposure do I have in my portfolio? Is it all clean energy? Is it all material stocks, right? I love the inflation play, and I really love the clean energy play. But if someone came up to me and they said, hey, Puppy Trades, I think, the solar energy sector and the clean energy sector is the #1 sector to be in, I would agree with them. But if someone is hypothetically only in clean energy, they're only in solar energy, they're only in electric vehicles, then they can have a year like 2021 where the value stocks outperform in Q1, and in the second and third quarter, the big tech stocks outperform. And by the time the fourth quarter comes around, if you were only in EV, if you were only in solar energy, you've been mostly flat or down for the entire year. So people diversify not just because they're spreading their eggs, but because the market rotates from sector to sector. So if you're only in one sector, it's going to be harder for you to get money flown into your sector as the market rotates and fluctuates leadership. So let's get right into this list. Number 10 is in fact a clean energy name. We're gonna do Enphase Energy is the number 10 stock to buy and hold for October 2021 and beyond for myself personally. So here's why. It completes an A, B, C correction from this early February high, then goes on a 1, 2, 3, 4, 5 large wave 1 and has an ABC correction. It pulls back to the 61.8% retracement and it puts in a wave 2 low. So the 78.6% retracement is about 128. We'll use that as the stop. The widest invalidation level is the beginning of wave 1, which is 108. I think there's a very low probability that 108 is broken in the foreseeable future. I don't think 128 will go either. I think that this is a wave 1 and this is a wave 2. Enphase Energy is going to go on a wave 3 that is at least the length of wave 1 placed at the wave 2 low. That would take Enphase Energy to about 240. From there, I'd expect a shallow wave 4 correction that will conservatively retest the wave 1 high before a wave 5 that is at least the length of wave 1 placed at the wave 4 low. So if all that happened, we would see a wave 5 take Enphase Energy all the way to 311. I think this is pretty conservatively going to happen in the first half of 2022. I think Enphase Energy looks great. So puppy trades, why is it number 10? You know, if it looks like an awesome 1, 2, 3, 4, 5 wave 1, now a great wave 2 for waves 3, 4, and 5. The reason it's number 10 is when we zoom out to the larger degree, we have to figure out what Enphase Energy is on the larger degree, and we can't do that without looking at Tesla or First Solar. So let's look at Tesla and First Solar, and we're going to explain the conservative view for clean energy. The conservative view for clean energy is best illustrated with Tesla, and this is a wave 1 and a wave 2. This is a huge wave 3, and an ABC correction is putting in a wave 4. That means that Enphase Energy and Tesla, by this count, are both within a wave 5. For Tesla, wave 5 will be the length of wave 3 placed at the wave 4 low. That will take it to 1,368. By this count, bulls would have to be pretty damn cautious about Tesla in the longer term at 1368. Why is this conservative? This is really conservative because this big old rally could very well be all a wave 1. And that means that this low that we put in recently in March is a wave 2. So it would be the same minimum expectation in the short term. The length of this rally placed at this low is going to take Tesla to 1368. But if this is a wave 1 and a wave 2, 1368 is just the minimum wave 3 target. From there, we'd have a shallow wave 4 correction and go on a wave 5 even higher. So the aggressive view for Tesla would say that 1368 is a very shallow kind of wave 3 target. So if we realize that the Tesla's in a very aggressive, 1, 2 wave 3, then we'll count Enphase Energy more aggressively, which I'll show in a second. For now, we can only say Tesla's within a wave 5. The length of wave 3 placed at the wave 4 low will take Tesla to 1368 at least. What's the evidence that that's going to be very conservative for Tesla? If we look at First Solar, that's really where we get this idea that this is going to be a much bigger long-term breakout than maybe what we've been talking about recently. If we look at First Solar, this is about an 8 or 9 year Elliott wave nest. A wave 1, an ABC correction wave 2. Then on the smaller degree, another wave 1 and an ABC correction putting in another wave 2. That means that First Solar spent an entire decade forming a monster base, and that this was all institutional accumulation, and now it is exploding into a wave 3 of a wave 3 on the larger degree. And we're going to see First Solar kind of explode pretty soon. So this, First Solar is really hinting at the idea that what I have for Tesla is too conservative. What I have for Tesla may be too conservative in that this is all actually a wave 1 and this is a wave 2. The minimum expectation would be the same. The length of this rally placed at this low will take Tesla to 1368, but by this count, that would be a very conservative wave 3 target. We'd have a shallow wave 4 correction. We go on a wave 5 higher. So where does that leave Enphase Energy? If we look at Enphase Energy, the kind of view that we have for Tesla that's more conservative is that this is a wave 1 and a wave 2. Just like Tesla, that would be a wave 3, and this is a wave 4. So in this case, waves 1, 2, 3, 4, and 5 will take Enphase Energy to about 310, 311, and then we look to kind of take profits and be cautious in the longer term. Here's the thing, that's probably going to be too conservative. And just like Tesla, the more aggressive count is probably the more accurate one. And that says that this is all a wave 1 and this is a wave 2. That means waves 1, 2, 3, 4, and 5, taking Enphase Energy to 310, 311, will just be the minimum conservative wave 3 target. We'll have a shallow wave 4 correction. We'll go on a wave 5 that's much higher. So Enphase Energy, I like it a lot. The reason it's number 10 is because the only count that I'm really quote unquote for sure about is this one from the cycle from the May low. This 1, 2, 3, 4, 5 wave 1, this ABC correction puts in a wave 2. So Enphase Energy is going to go on a wave 3 at least to 240 before a shallow wave 4 correction and a wave 5 to 310 regardless of the larger degree count. So Enphase Energy looks good. I just like it kind of on that smaller degree. Let's look at Alibaba and NetEase. So number 9 on this list is one of 2 duos. I only have 2 duos, but number 9 is Alibaba and it's NetEase. I think they need to be traded together. We'll talk about both of them right now. So here is Alibaba. We'll have to look at the 10-year chart for Alibaba and NetEase. It forms a wave 1 and a wave 2. It then forms, I believe, another wave 1, and it's putting in right now an ABC correction to end another wave 2. So let me make it really clear that Alibaba could definitely be number 1 if it wasn't for this number 4 criteria, right? I haven't really been hitting Alibaba on the nose, right? So, you know, it's not necessarily a winner in the way that, you know, Pfizer or First Solar or Bitcoin are winners. But I still like Alibaba a lot. And it's a pretty incredible opportunity because remember when we talk about the idea that usually when someone invests in a growth stock, they're investing in a company that is recently IPO'd, you know, it's kind of new, they're still building their facilities, they're still getting established. With Alibaba and NetEase, these are established names. These are almost monopolies, but they're also still growth stocks. So this is the Chinese Amazon, and the charts kind of say that it's a Chinese Amazon-like opportunity right now. This is a wave 1 and a wave 2. So the biggest invalidation level are going to be these lows right around 130 from December 2018. I believe that this is another wave 1 and an ABC correction putting in another wave 2. So if Alibaba is above 129, 130, it should begin a wave 3 of wave 3. And the very minimum target would be the length of wave 1 placed at the wave 2 low. That would take Alibaba to at least 326. Now that's extremely conservative for a wave 3. Realistically, wave 3 will go much higher, and then wave 4 will conservatively retest the wave 1 high. Then a wave 5 will be at least the length of wave 1 placed at the wave 4 low. That means waves 1, 2, 3, 4, and 5 could take Alibaba as high as 510 within this cycle. So the long-term view of Alibaba, even though it's getting a little tight, if it's above 129, 130, waves 1, 2, 3, 4, and 5 will take it as high as 510. So we're getting a little close to 129. That's why I think that NetEase is going to be really important and why it's grouped with Alibaba in this group, because it's almost an identical chart. But NetEase has held up a lot better. So NetEase is a wave 1 and a wave 2 that ends in 2018, just like Alibaba. Then NetEase forms a very pretty 1, 2, 3, 4, 5 large wave 1, and ABC correction ends a large wave 2. We're right between the 50 and the 61.8% retracement right now. So a very tight stop for NetEase would be the 61.8% retracement of 74. A wider invalidation would be the 78.6% retracement of about 57. I think NetEase holds above both of those, and that this is a very rare opportunity where these growth stocks in the Chinese sector are almost monopolies in their field, but they're still growth stocks and they have the growth stock potential for these massive returns that we kind of usually look for in younger companies. So this is a 1, 2, 3, 4, 5 wave 1 for NetEase. This is an ABC correction wave 2. This is looking very good that we're about to enter a wave 3 of a larger degree wave 3, and NetEase will go at least the length of wave 1 placed at the wave 2 low. It's going to go ahead to 175. That would be the minimum wave 3 target. Then wave 4 conservatively will retest the wave 1 high before a wave 5 that is at least the length of wave 1 placed at the wave 4 low. That means NetEase could go as high as 230 for waves 1, 2, 3, 4, and 5 just within this cycle from the 2018 low. So NetEase and Alibaba, they both look incredible. That's why they as a group are number 9. I think they're best traded together. Here's number 8, TWLO. So TWLO and Enphase Energy, they're a little shorter setups, right? They're not the big long-term multi-year setup, but they have a lot of high confidence That's the only reason they're number 8 and number 10. Okay, this is a wave 1, and an ABC correction puts in a wave 2 for TWLO. I then actually predict that the length of this rally placed at this low would give the next target. That ended up being another wave 1, and an ABC correction to put in another wave 2. So it's a 1-2, 1-2 Elliott wave nest. We're beginning a wave 3 of a wave 3 on the larger degree. Let's zoom into the smaller degree right now. The smaller degree says that TWLO is a very clear 1, 2, 3, 4, 5 wave 1, an ABC correction. We're ending wave 2 right now between the 61.8 and the 78.6% retracement. So the invalidation levels don't get any better than this. If TWLO is above the beginning of wave 1, which is 275, it's going to go on a huge wave 3 that will go to at least 500 before a shallow wave 4 correction in a wave 5 higher. So the length of wave 1 placed at the wave 4 low would give a minimum wave 5 target of about 678. So I'm looking for TWLO in the first half of 2022 to go reach the 670 range. In the very short term, I'm looking for it to go to 500 for this wave 1, wave 2, wave 3, wave 4, retest the wave 1 high. Then we go on a wave 5 even higher. So on a lot of degrees, TWLO looks really good. If it holds above 275, the next stop is 500 before a shallow wave 4 correction in a wave 5 that ultimately takes TWLO into the 670s. I'm looking for 670 to get reached in the first half of 2022. I know that's aggressive, but I think this is a pretty nice 1-2, 1-2 Elliott wave nest. We're about to get in wave 3 of wave 3 of wave 3. So TWLO looks really good. It's a phenomenal risk reward ratio if it's above 275. So I like TWLO. It is number 8. Number 7 is the only other pair on this group. We have Pan American Silver and First Majestic Silver. I like them both. We'll talk about why right now. So one of the things that I forgot to mention is for the level of confidence, a big deal that will play into the level of confidence is how many degrees of the wave count are available. So for a recent IPO like Palantir or Li Auto, right, there's a higher risk reward, right? If someone is correct about Palantir and Li Auto, they're going to be in a potential future Neo or a potential future Microsoft even for Palantir, right? And if they're wrong, then that would be a pretty hefty loss. But the only bigger thing about the confidence for those two names is that a recent IPO only has 1 degree of Elliott wave theory that you can use, right? There's only about 6 or 7 months of chart history for Palantir or for Li Auto. So older companies like Boeing or Pfizer or Silver, they have another advantage in that they have more chart history. They have more degrees of Elliott wave theory to use. So when we look at Silver right now, we actually have about almost a 20-year chart pattern that we're trading with. This is all a huge wave 1 and an A, B, C correction putting in a huge wave 2. So this is a 20-year pattern that takes place to play out. That means we're within a monster wave 3 right now. I believe this is another wave 1 and another wave 2. This is another wave 1 and another wave 2. And this is a wave 1 and an ABC correction putting in a wave 2 right between the 61.8 and the 50% retracement, which is about 21 to 25. So I think this is a clear wave 1 and an ABC correction putting in a wave 2. So for once, the invalidation level and the stop level isn't that far away for these, big time silver miners. If Pan American Silver is above 16.92, then it's going to go on an explosive wave 3 of wave 3 of wave 3 of wave 3. Okay, I know that just sounds like a lot of wave 3s, but this is kind of the idea that what happened to crypto last year is eventually going to happen to silver, and it's going to be an even kind of bigger level of FOMO when it does happen. So First Majestic Silver looks really pretty. This is Pan American Silver, kind of the large cap, but this is a wave 1 and an ABC correction putting in a wave 2. This is another wave 1 and another wave 2. This is another wave 1 and another wave 2. This is another wave 1 and an ABC correction putting in another wave 2 between the 61.8 and the 50% retracement. So I'm expecting a monster wave 3 to be at least the length of wave 1. That would take Pan American Silver to 51. That would be a conservative wave 3 target. From there, we'd have a shallow wave 4 correction before a wave 5 even higher. So wave 4 conservatively will retest the wave 1 high, then wave 5 is at least the length of wave 1. That means just within this cycle, waves 1, 2, 3, 4, and 5 should take Pan American Silver as high as 68, 69, almost triple its current value. And that's for a company that invests in kind of mines a rock. Okay, so pretty big deal, especially when we talk about the inflation idea that's going to happen in a second. That's number 6. But let's stick to number 7. First Majestic Silver is the kind of smaller cap cousin of Pan American Silver. It's a wave 1, an ABC correction, putting in a monster wave 2. We have another wave 1 and another wave 2 coming into this year. We had I tweeted about a month before the massive kind of, First Majestic Silver squeeze, right? The Redditors apparently did. I can promise you the Redditors didn't do this, but this was a wave 1 and a wave 2 were at the 61.8% retracement. So if First Majestic Silver is above the 78.6% retracement of about 8.42, then this is a wave 1 and this is a wave 2. Wave 3 will be at least the length of wave 1 placed at the wave 2 low. Just like First Majestic Silver and just like Pan American Silver, that would take this rock mining company to triple its current value. Wave 1, wave 2, the length of wave 1 placed at the wave 2 low gives a wave 3 target of 30. From there, we'd have a shallow wave 4 correction before a wave 5 higher. That would be at least the length of wave 1 placed at the wave 4 low. That means that waves 1, 2, 3, 4, and 5 could take First Majestic Silver as high as 43 in the longer term cycles. So yeah, this company that mines silver could triple and quadruple, and it's not the only one. So it's a great opportunity. I also love the idea that it's a great diversification piece, for people who are more interested in market risk in other, portions of their portfolio. At least that's how I view it. So here is Palladium. Palladium is number 6. Number 6 is Palladium. It is a 1, 2, 3, 4, 5 large wave 1 and an ABC correction putting in a large wave 2. So I like this a lot. It's a value play, certainly. It's got a lower reward than other names on this list, but it actually does have a lot of blood being taken advantage of. Just in September, this had about a 20% hit. There's a lot of blood to take advantage of. I think this is clearly a 1, 2, 3, 4, 5 wave 1 in an ABC correction right now ending between the 78.6 and the 61.8% retracement. So the length of wave 1 placed at the wave 2 low will take Palladium all the way to 314. From there, we'll have a shallow wave 4 correction before a wave 5 that's at least the length of wave 1 placed at the wave 4 low. That would mean a wave 5 for Palladium would take this ETF PALL as high as 422. I think that's all going to happen in the next in the coming years. We're going to see Palladium almost triple, at least more than double. But the length of wave 1 placed at the wave 2 low gives a conservative wave 3 target of 314. From there, we'd have a shallow wave 4 correction that retests the wave 1 high and a wave 5 that's at least the length of wave 1 placed at the wave 4 low. That means waves 1, 2, 3, 4, and 5 just within this cycle from the March 2020 low could take Palladium as high as 420, 422. Now, I want to bring this up because we talked about this idea that the diversification is a big deal, right? So how do these stocks fit together in a group? Am I just entirely in market risk? Palladium's one of the few things that's actually proven it can be in a bull market while the S&P 500 is down. So Palladium right here has a 45% correlation in the past 10 years to the S&P 500. It was actually in a bull market while the S&P 500 crashed during 2018. So Palladium has proven that it is, a nice diversification play. One thing I always kind of like to point to is this really cool kind of tidbit right here. A change in economic conditions, such as a recession, can adversely affect the price of Palladium. Palladium is used in a wide range of industrial applications, and an economic downturn could have a negative impact on its demand, consequently its price and the price of its shares. So a recession will cause Palladium to go down. Well, it looks like in this chart that Palladium is about to go up, and it's about to go up a lot. So perhaps the opposite of a recession is going to occur. This Palladium chart may be hinting that we're going to have an economic boom. And it's not the only value stock that's hinting we could have an economic boom. So we'll get into that. We're now entering the top 5. So the top 5, number 5 is Zoom. And Zoom could easily be number 1 if it wasn't for this right here. Has it taken multiple attempts? And yeah, it has taken multiple attempts. I've been bullish on Zoom and Alibaba for a little bit. Okay, I think the large institutions have been bullish with me. I think they've been accumulating the crap out of Zoom and Alibaba this entire time. And what we just saw was that Salesforce, it bored you to tears, right? Puppy trades, right? Salesforce doesn't even move, right? Salesforce doesn't even move, right? Retail bag holder this, right? And then what happens? Salesforce goes and it turns around and it confirms that this, 9 or 10 month base was all institutional accumulation. And then what did Salesforce do? Now Salesforce is above this high. Okay, it's proven that it's been being accumulated by large institutions for the past year. And Zoom's about to do the same thing. Okay, but I'm not going to wait for it to go break above this high. Okay, as the LA wave theorist, I'm going to use some basic LA wave principles to buy the base while it's still kind of rounding out. Okay, so let's look at the wave count right now. This is a 1, 2, 3, 4, 5 large wave 1. An ABC correction, large wave 2. We're at the 61.8% retracement right now for the first time since this October high. So in my opinion, the large institutions have been absorbing this supply for over a year, for at least a year. Just like Salesforce, the large institutions have been accumulating the crap out of Zoom. They've been absorbing the retail margin capitulation, and we are going to know that for a fact when Zoom is above this high. But I don't want to wait for Zoom to be above this high. I think that this is a wave 1 and this is a wave 2. The length of wave 1 placed at the wave 2 low says the next minimum wave 3 target for Zoom is 779. And let's look at this 78.6% retracement. That's going to be the invalidation level for a wave 2. So if Zoom's above 173, then we should see it have an explosive reaction into wave 3 and go break above this high. When it does that, it will confirm that it's been being accumulated by the big boys. And this is a stock that is very early into its life cycle. That's the difference between Salesforce and Zoom. Salesforce has been around for a little bit. Zoom just recently IPO'd, okay? And when you're in a stock that has recently IPO'd, there is a much higher risk reward potential because we are early into Zoom's life cycle. If this is a 1, 2, 3, 4, 5 wave 1, and this is an ABC correction wave 2, then wave 1 placed at the wave 2 low gives a wave 3 target of about 780. That's the very conservative wave 3 target. From there, quite conservatively, we could expect a wave 4 to retest the wave 1 high before a wave 5 that is at least the length of wave 1 placed at the wave 4 low. That means an ultimate wave 5 target just within this 1, 2, 3, 4, 5 waves impulse is 1,116, 1,117. And then what happens? That's all going to be 1, 2, 3, 4, 5 waves that completes a large degree wave 1. Zoom will have a pullback, and we'd be looking for it to go even higher. So it looks like there's going to be multiple stock splits in Zoom's future. Okay, it's a big risk, but if it's above this 78.6% retracement, it's kind of like Fastly, where it may be a Microsoft, it may be a Google. You don't know until it happens, but the wave theory is really hinting that this is a huge base, this is institutional accumulation, and that this is going to turn around just like Salesforce, go break above this high, and we're going to know that the institutions, they've got a hold of this one, and they're probably not going to let it go until a couple of stock splits have happened in the future. So I like Zoom a lot. Ultimately, I think in the next couple of years, it'll start heading into the 1,100 range for waves 1, 2, 3, 4, and 5. Number 4, whenever I find myself talking about Zoom and kind of these sexier clean energy names, I like to make sure I'm talking about a boomer stock too. I love diversification, and this is a commodities play. This is a textiles producer called Unifi. So this really kind of makes money on, it's really part of the inflation play. It's part of the idea that, cotton is exploding. We're going to see oil in the longer term cycles continue to explode. I think right now, kind of the big theme of the fourth quarter that a lot of people are missing is that the energy plays, the industrial plays, they're outperforming right now. I think that the kind of boomer stocks, they're going to do a little better than the people who are only focused on the NASDAQ. So here is Unifi. It is a textiles producer. It forms a huge 1, 2, 3, 4, 5 wave 1 and an ABC correction putting in a wave 2. So this is about, 10 or 11 years of a pattern that's playing out. Remember, this is a pretty important criteria. How many degrees of the wave count are available? We have a lot of degrees right now for Unifi, so I think we have a lot of confidence. This is a wave 1 and a wave 2. This is a clear 1, 2, 3, 4, 5 waves impulse. Notice how I like this. The 161.8% extension of wave 1 is where wave 3 passes. Wave 4 retests the wave 1 high, and then boom. The length of wave 1 placed at the wave 4 low is where wave 5 turns around to the penny. That is a clear 1, 2, 3, 4, 5 waves impulse. This is an ABC correction that ended at the 61.8 to 78.6% retracement. So the larger degree wave 3 count or wave 3 target is 62. That's the 161.8% extension of this entire wave 1 rally. Wave 1, wave 2, we're in a large wave 3. This large wave 3 is subdivided into 5 waves. This is wave 1 of wave 3 and wave 2 of wave 3. Wave 3 of wave 3 will take it above this high from about 2017. We have a shallow wave 4 correction and a wave 5 higher. So I think there's a path and a destination right now that leads to 62 for Unifi. The invalidation level is 16 and the stop level is 19. I love textiles producer Unifi. I love the idea of being in the inflation play. That's kind of one of my core positions right now, is the inflation play. And one thing I like about the inflation play is there's a lot of sectors that can really be, the inflation play, the value side of the market. This is a 1, 2, 3, 4, 5 wave 1, and ABC correction ends wave 2 right in the golden zone. That 61.8 to 78.6% retracement is where we wick. And then boom, we're within a huge wave 3 that ultimately leads to 62. And that would just be wave 3, but have a shallow wave 4 correction, go on a wave 5 higher. So I like Unifi a lot. In the coming years, I expect it will go to 62. I want to see it hold above 19 to 16 for now. So that's number 4. Number 3. Beyond Meat. Beyond Meat is number 3. Beyond Meat's number 3. The reason it's not number 1, is because it's pretty risky. I mean, it is pretty risky. It's a growth stock, but man, why is it so high on the list then? Because what's the upside? Oh man, what's the upside for Beyond Meat? That's a big question to ask me. I'll tell you what it could be. What it could be is that this is a wave 1 and an ABC correction that put in a wave 2. Okay, this is on the, IPO count. So remember, more recent IPO, higher risk reward ratio. Wave 1, ABC correction, wave 2. This is where it gets interesting. We have a 1, 2, 3, 4. And coming in to 2021, we actually predicted this wave 5 to happen. So we predicted this wave 5 to happen in my very first kind of top long-term picks video. Beyond Meat was on this at about 125. When it was right around here, and I said I was looking for a big wave 5 at least that was going to go on an explosive rally. And then Beyond Meat has this crazy gap up. I remember that morning because I tweeted in all caps, sell, 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 get out, take profits. I actually said put it in Pfizer. But anyway, the point is, we have proven that this is a 1, 2, 3, 4, 5 waves impulse. We predicted this 5th wave. So this 1, 2, 3, 4, 5 waves is all a wave 1. This is an ABC correction right now that is ending between the 61.8 and the 78.6% retracement. So I'm looking for a huge wave 3 to be at least the length of wave 1 placed at the wave 2 low. So this is a little tight. Invalidation for Beyond Meat is a 78.6% retracement of 85. Now, Beyond Meat's got a high beta. I don't think it goes below 85. I think that this is a wave 1 and a wave 2. So the minimum wave 3 target is 270. That's just the length of wave 1 placed at the wave 2 low. That would be an extremely conservative wave 3 target. And wave 3 would be much faster and stronger than wave 1. From there, we would expect a shallow wave 4 correction that will conservatively retest the wave 1 high. But before we even get into that, let's talk about the idea that hypothetically Beyond Meat does go on this wave 3 and it does break above this high from this IPO high around 240, 239.71. That would confirm that for the past 2.5 years, almost the past 3 years, institutions have been accumulating the SHIT out of Beyond Meat. And they have big plans for it. They might even have bigger plans for Beyond Meat than Zoom. This is a wave 1 and a wave 2. This is a wave 1 and another wave 2. We'll know for a fact that that is the accurate count when we are above this high, that we are in a wave 3 of a wave 3. Okay, within the cycle from the March 2020 low, this would be a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low will take Beyond Meat to 270. From there, we'd have a shallow wave 4 correction that conservatively retests the wave 1 high before a wave 5 that's at least the length of wave 1 placed at the wave 4 low. That could take Beyond Meat as high as 390, almost 400. just for wave 5. So wave 1, wave 2, wave 3 goes to 270. Wave 4 retests the wave 1 high. Wave 5 is the length of wave 1, places the wave 4 low. We could see Beyond Meat go all the way to 390 in the longer term cycles. And then what happens? Those 1, 2, 3, 4, 5 waves will become part of a large degree wave 1. So I think the institutions have been accumulating Beyond Meat because they have big plans for it. And just like Zoom, I could see multiple stock splits in Beyond Meat's future. So I like Beyond Meat. It's got to be above 85 for me to make the argument it's going to be in a wave 3 of a wave 3. Puppy trades, what on earth could be better than Beyond Meat and Zoom? The company that makes all the airplanes. I'll tell you what. This could have been number 1. Maybe this should be number 1. But this is number 1 for people who have, this is number 1 hypothetically for people who have grandkids. I don't have grandkids, and that's the only reason this isn't number 1. If I had grandkids, this would easily be number 1. Okay, this is a 1, 2, 3, 4, 5 large degree wave 1 for Boeing. Okay, this is the value stock. So remember, value stocks. Are you really trading against zero? You know, technically, yes. And technically, the sun might not rise tomorrow. But Boeing's got some assets. It's not really something where a trader at least feels like they're trading against zero. It's a value stock. This is a 1, 2, 3, 4, 5 wave 1. This is an ABC correction wave 2. So I believe that the biggest count is that this is a almost 17, 18 year wave 1 that takes to play out. And this is an ABC correction that puts in a large degree wave 2 on a big time degree for Boeing. So remember this, another factor, how many degrees of the wave count are available? Boeing's an older company, very similar to Pfizer, very similar to Silver. We have multiple degrees of a wave count. The largest degree is that this is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low will give a conservative wave 3 target for Boeing on the larger degree of 511. That'd be the conservative wave 3 target. From there, we'd have a shallow wave 4 correction that will conservatively retest the wave 1 high before we go on a wave 5 that is at least the length of wave 1 placed at the wave 4 low. That means that the wave 5 target for waves 1, 2, 3, 4, and 5 will eventually take Boeing as high as 860. So this is the value stock. It's a company that is very established, and it looks like it's going to quadruple on the larger time horizons. It looks extremely good in the bigger picture. It looks extremely good in the bigger picture that this is a 1, 2, 3, 4, 5 wave 1, an ABC correction put in a wave 2, and now we're gonna get into the smaller degree count right now because it's getting explosive for Boeing. From the March 2020 low, we have a wave 1 and an ABC correction putting in a wave 2. We have another wave 1 and another wave 2 ending right around 191. We haven't broken below 191. So that's kind of the stop level right now. If Boeing's above 191, there's not a lot of risk to the downside. And the upside potential is pretty substantial in the short term and the long term. I think that this is a wave 3 of a wave 3 in progress. The minimum wave 3 target is 307. From there, we see a shallow wave 4 correction and a wave 5 that will be at least the length of wave 1 placed at the wave 4 low. That means we could see Boeing go to at least 365 for waves 1, 2, 3, 4, and 5, and that's on the smaller degree. So on the smaller degree, this could be in the winner's corner. A trader hypothetically could be in the driver's seat pretty quickly in a trade like this. I think Boeing holds above 191. In the short term, it's going into the 350s. In the longer term, it's going much higher than that. The minimum wave 3 target would be about 511. We'd have a shallow wave 4 correction and go on a wave 5 into the 860s in the bigger picture. And that'd be on a company that makes all the airplanes. It's a value stock. I like it a lot. It's got a lot of great things about it, especially it's got a lot of blood, a massive dip. So puppy trades, what on earth could be better than the company that makes all the airplanes, or Beyond Meat or Zoom? Well, what I really ask myself with this list is, which of these companies would I personally regret not buying? And that's really kind of how I structured the list. And with Fastly, I just couldn't justify Fastly not being number 1. Here's the thing with Boeing, we're looking at multiple years going down the road and it tripling and quadrupling at the price target, okay? With Fastly, the reason that Fastly's number 1 is because of this number 3 right here. What's the upsides? What's the upside for Fastly? It's got a direct relationship to the size of the dip and the recency of the IPO. Fastly right now is a perfect storm of both of those things. Okay, this went on a ridiculous run. I would argue that this had the most impressive run in 2020 of any stock. This was an insane, eye-popping run for Fastly. And it was a 1, 2, 3, 4, 5 wave 1 and an A, B, C correction that's put in a wave 2 low. So Fastly's been kind of red for a while. And since Fastly's been red, we've seen Cloudflare explode. We've seen Salesforce explode. You know, we talk about how Okta and TWLO are about to explode and how Zoom likely is about to explode. I think that the laggard software stocks are the biggest opportunity right now for growth in the fourth quarter and beyond. I think Fastly is kind of the pinnacle of that right now. This is a clear wave 1 on a stock that is very recently IPO'd. So this is a wave 1 and a wave 2 that is ending right now between the 61.8 and the 78.6% retracement. So 1, 2, 3, 4, 5, wave 1, and ABC correction is ending wave 2. Now, the only bad part about Fastly is that the invalidation level is really close, okay? But that also is kind of a good thing because there's not really too much risk. If Fastly is above this low of 33, which isn't too far away, then wave 2 is in right now. And it ended at exactly the 78.6% retracement. So this is a wave 1. This is an ABC correction. Wave 2 is now ending at the 78.6% retracement, and it's ending at the place where the length of wave A placed at the wave B high is where wave C has ended. We've seen Datadog explode. We've seen Cloudflare explode. We've seen Salesforce explode, and we're about to see Okta and TWLO and Zoom explode. I think that the laggard semiconductors and the laggard software stocks are kind of the best places to be for tech. And I think right now, Fastly in the longer term is the best opportunity in the market. It's a massive dip. There's a lot of retail traders that got forced out of margin on this one. And just like Beyond Meat, just like Zoom, just like Salesforce recently, when, and I should say if, Fastly goes and breaks above this high of 136, we're going to know that large institutions were accumulating and absorbing this supply for over a year. And they have huge plans for Fastly. I think it looks something like this. The length of wave 1 placed at the wave 2 low is the minimum wave 3 target of 159. From there, we'll have and I gotta stress, that is a minimum wave 3 target. Okay, wave 3 most likely will go much further than 159. Okay, then we would expect conservatively a shallow wave 4 that retests the wave 1 high. From there, a wave 5 would be at least the length of wave 1 placed at the wave 4 low. That would take Fastly to 260. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1, then waves 1, 2, 3, 4, and 5 could take Fastly to 260 just within this cycle from the March 2020 low. That means that this would be a 1, 2, 3, 4, 5 waves impulse. And then what would happen? Those 5 waves would become the subdivision of a large degree wave 1. We would have a wave 2 pullback and we'd be expecting to go much higher. So we are so early in Zoom's, Beyond Meat's, and Fastly's life cycle that there is a much higher risk reward potential. And if we look at Fastly right now, when I was making this list, what stock would I personally regret buying? What stock has a relatively low risk trading against 33? And what stock has the most upside? In my opinion, it's clearly Fastly.